Okay, we've heard some polar opposite points of view, both with the preceding speakers and across the panel's introduction now. Would anybody like to start with questions? I will start then. Tim, we heard Roger Sutton say this morning that there is a battle to keep insurers, reinsurers here in the Christchurch and therefore presumably the New Zealand market. We've heard that said before in various ways. Is that real? Is it being overstated? Is there actually a prospect that a market the size of New Zealand could face the loss of reinsurance?
Well, people have said this is the fourth largest scale insurance event. It's happened in the smallest market in the world, population of 4 million. So sure, it made reinsurers wake up with a jolt because the 25 billion US cost here is just a wee bit short of the insured impact in Japan of about 30 to 35 billion US, where there was an economic loss of 300 billion US compared to the 35 or so billion US here. So we've certainly stood up there and drawn attention. I was talking to Kelvin in the coffee break. He's been talking to reinsurers, trying to assure them about the land under the ground so that they get a better understanding of the situation. There is a switch to sum insured in New Zealand. That is a product of the reinsurers' decisions that they need to have greater certainty as to the amount of liability they face should there be another catastrophic event. The sum insured gives you that exactness, and so the total replacement policies that have been at the order of the day for the last 20 years are going as a result of reinsurers to ensure that they stay in the market. But if we lose them, we lose an awful lot to this economy, and there's a very big reality to that. And so I'll stop there. There's other things I could say.
Katherine, I can see you want to respond.
Yeah, I would like to. This is something we see wherever we do disaster work. This is not an unusual response from the insurance industry to indicate that this is going to be a problem. We may not stay in the industry after an event like this. They will stay in the industry. The brokers that are here are very strong brokers. You've got Marsh and Ann and many good Kiwi brokers here, and they're going to make sure that you have insurance. So this is something we hear time and again. It's not unusual. There's a few things that the insurance industry gets out, in part, I will say, at times to make sure that people just try to settle their claims. So this is not unusual to hear.
Question, sir. Is there a microphone? Oh, gentleman over the back first, and then we'll come to you.
Question for Tim. I'm David Ayres. I'm the Mayor of Waimakariri, which might remind people it's not only about Christchurch. Tim, but my question is about the delay in settling insurance, which has consequences beyond the actual insured and the insurer. And that is, we've got in Rangiora, the anchor store of the farmers was shut down about a year ago as earthquake prone by the tenant themselves who own the insurance policy. In the meantime, there have been arguments with their insurer. There are 2 engineering reports, I'm told, on behalf of the owners and the tenants, which both say there's significant earthquake damage within the building. The insurer sits on their engineering report, which says there's very little earthquake damage. In this case, it's about the only building in Rangiora that doesn't have earthquake damage. In the meantime, what all is happening is the middle of our largest town, the Waimakariri, is dying because of this impasse with an insurer. Now, I just want you to take back to your members the social and business consequences of these kinds of delays.
Thank you, David. I know Tim can't comment on specific insurers because he doesn't represent a specific insurer, doesn't know the detail of the contract, but generically, are you able to comment?
Well, I mean, obviously insurers do not want to see delays for no reason at all. I don't know the specifics of that case. Yes, it is having an impact, and I can assure you that no insurer would be happy to see that occurring. But there are obviously engineering and legal disputes there that need to be resolved. I don't know the details of it, but I can take that message back, certainly.
And Tim is not here for this afternoon's session, but he's made an offer. If there is an inquiry that he can progress through email, he'll happily deal with it in that way. Just reminding you, he can't answer specific insurance by insurance company issues, the generic issues, I'm afraid. Sir?
This is a generic one in the sense that I'm Bob Rogers, I'm an ordinary citizen.
Welcome, Bob.
Also having had delay of 2 years, deny 2 days ago, and I imagine an aggressive defence coming up. I look up the company, which will remain nameless underneath your requirement, and look at their balance sheets for their last annual reports, and I find that they're still paying 1 cent more in dividend this year than they were last year, actually 2. How come, under this stressful arrangement and all the costs that you're saying, the insurance companies are still, if this one is able to be spread across the rest, how come this company is not suffering like I'm suffering?
Tim.
Well, I don't know the balance sheet of the anonymous company, but the balance sheet. The balance sheets of the insurance companies took a massive hit in 2011.
Not 2012.
No. So if you run a company and you've had a massive hit on your balance sheet, what do you try and do over the next 12 months?
Delay, deny.
No, you don't. No. The commercial response is to restore your balance sheet, and that's what's happened. And premiums have gone up substantially around the country to restore balance sheets, so that insurers have strong balance sheets in order to respond to claims that come out in future. And that's the sense of it. Would you prefer them to be broke?
I'm not broke.
Right.
All right.
I've got a contract. They're winning, I'm not.
Gentleman over here to the right.
Thank you very much. My name is Herman Myberg. I live here for 10 years. I come originally from the Netherlands, and I, of course, was surprised in West Melton when we had our 7.1 that shook our house to bits. But I'm not going to talk about an individual case. I just want to raise the question again to the panel. Do you have an answer or any idea of what was already suggested just a minute ago, that we may have to revisit the way property is insured here in New Zealand, and maybe what we have thrown away so many years ago should be reinstated in a better and a different kind of way? I'm talking about KiwiSure, which I think is a pretty good name.
All right. Emily, would you like to comment on the idea of a state insurance company reinstated across the market? And in fact, that picks up on the question from Sarah earlier, or the suggestion, that we do not need a private sector. I'm sure Tim will comment on this also, that we could have everything insured with the state.
I think as an idea, it's quite an attractive one. I agree with you, but I am pretty sure that even if we had KiwiSure would have policies, which would be contracts, which would have terms and conditions, which in certain circumstances would still raise issues. It wouldn't just be gathering funds to create a fire brigade. Perhaps a little bit simplistic. It's not a bad idea. It could be part of our existing insurance market if we wanted to get together and look at doing it. But looking at the EQC insurer difficulties that we have now, I don't know if it would actually make things simpler. Everything's more complicated than we like to think, I think.
All right. Tim, do you want to comment on that one?
No, I totally disagree. I think a competitive insurance market provides innovation and choice for people. I think that's important just as much as we have in any market. I can see we're trying to address social issues at the same time as financial protection issues, and conflating them into a single KiwiSure or whatever entity, I think raises some significant questions that if you want to have the bureaucrats running the system able to respond to a catastrophe, then bear those risks in mind. As taxpayers, and the government has to make a decision around where it wants risk to lie, if taxpayers of New Zealand want to take all of that risk on, then that's another judgment to make, but it will mean that other things that New Zealanders want to have done may not happen.
And Katherine, are we going to see some unanimity between you and Tim on this, coming from a market-based approach that you do?
You know, there's something that's done like this, I'm sure you're aware of it, called captives. Captives are a joint pooling of funds by individuals and companies. They're throughout the world. They're usually covered by a catastrophic insurer in case things really blow up. But there's models for that kind of thing that can be looked at. Same kind of things, I agree. You're going to have insurance contracts. You're going to have to staff it. There's a lot that goes into it. Anything's possible. Certainly the captive model might be something you look at. But I think, you know, one of the things that could be done almost readily to help move things along would be some government interaction as far as a Fair Claims Practices Act, where there's rules for responses. They must respond in so many days. They must pay when they know money's owed. So there's certain steps that exist in many markets around the world that insurers must abide by. Simple steps, but they're legislated so that they know that they're watched. That might help move some of this forward as well.